What is good, gang? First lesson since I've been back, so take it easy on me. But I think all of us can learn something from what I'm about to teach. So let's go over it. So here we have a pattern we all know and love. This is the generic topping, bottoming sequence that gets taught through every single quality trading program ideology, right? Um, Now, when it comes to trading, in a pattern like this, every single entry model, confluence, whatever you're trading, it all works, right? Now, in the ideology that we employ for most of my audience, ICT, here's what that sequence looks like and what each step is giving us in terms of information. Okay, so we're going to have an established trend, right? We have an established trend coming into a move. We're going to create a swing point, right? In this case, it's a higher high and a higher low, then another higher high. After that extreme is reached, we're going to put in a lower low and then a lower high. And we're going to repeat the sequence. Our change in state of delivery, or changing of order flow, or whatever you want to call it, isn't confirmed until we violate, and in my ideology or understanding of price, how I interpret the market, a closure beyond that swing point, which in our language is a breaker block. That's when the reversal, so to speak, happens, right? But that's not possible without this leg, here to here. This leg doesn't matter without this leg prepped. Now, this may look different on correlated assets because of a concept that we all know and also use called SMT. Right? SMT may or may not cause one asset of correlated tranche of assets to have what we call a failure swing, where it doesn't take out this swing point. But we'll ignore those instances for now. So, the reversal sequence. We have a trend, we have to have a swing point. This will be the breaker that we expect to use once it's violated, right? We have to have early traders get stopped. That's what the breaker is. Then we have those traders, that swing point, get souped. In that move, we're stopping our traders, creating SMT ideally, and forming our order block / inverse fair value gap. The next thing is going to be you're going to confirm that inverse fair value gap and create a candidate for fair value gap in this leg of price. You're going to confirm CSD with the order block that's formed above this high. And then when we close below here, we're going to confirm the breaker. Once we confirm the breaker and we have SMT, that's going to be our confirmation that we can expect the next leg of price in the opposing direction. Once we've confirmed with a closure below this higher low in most scenarios. Now, if there's no swing point, if there's no breaker that we can expect to confirm, price can't reverse. Now let's take a look at that in real time. Here we have Friday's price action. Friday's price action is as follows. On the open, we're going to trade lower and lower. Now, trading down here is a pool of liquidity, right? When we pair liquidity, which is what this motion is doing, right? We've taken out buy side, now we've taken out sell side. A lot of people, myself in my growing periods, would do this as well. Okay, ICT told me when I pair liquidity, I can drop down into a lower time frame, and we all jump to the 1 minute. And I look for a breaker, a fair value gap. We look for really anything to get in price. And then you see it, this formation right here. Right. We soup the low. Closed above this high. Right. We have everything we need, right? On the 1 minute? Yeah, we do on the 1 minute. But if we're trying to capitalize on the daily range, right, which typically requires a 15-minute, 30-minute, or hourly move, preferably the hour, because that's the fractal line time frame. For the daily time frame is hourly. But we're going to need at least a 5 or 15-minute swing, no? Right? What's not here on the 5 minute? We have no swing point. Our closest swing point from this low that we just took on the 1 minute, $250 points away. Do I think a 1 minute fractal is going to deliver me 250 points? Not logically, no. So, people who are in that trade, let's see how it goes. Okay, stopped. Now I'm going to focus us to the swing low that was put in at liquidity. What is our steps? Right? We need a swing point to form first. Now we have a swing point. We need it to be souped and create an order block. Ideally, what didn't we do here? Didn't create an order block. Trade up. Now, some people will look at here, okay, we have step one. We have our swing point formation. We can anticipate this breaker. Let's hop into the 1 minute. Oh, look, there's your fractal again. Let's see if it has legs. Let's go on the 5 minute. Nope. Stopped out. Okay. So it failed here. It failed here. I'm sure there's a long entry in here. But what does this swing give us? A closure below. That right there. And it's sequential down close candles. Closure below and sequential down close candles. That is by definition ICT's order block. Okay. Now in this scenario, you still have your swing point. You can use this high or this high, whatever you prefer. With these three up close candles and this swing high and swing low, I would likely use this one because this is the leg that manipulated price. I would use this one. Now you have your order block on your higher time frame, right? Here is that same entry. Breaker block, even though it's small. Swing high, swing low. Up close candle between. Fair value gap. Tags into it. Okay. All the boxes are checked. Now, by waiting for all these criteria to meet have been met, you've missed out on 1, 2, 3 possible losing trades. Right? Any rational trader who has taken these would have been done trading for the day. 3 losses, probably 2 losses they're cooked. Say they didn't take this one. Say they took this one and this one because they created lows, or this one and this one. They're cooked for the day. Now, once they're cooked for the day, and price is given what is required in order to move price, there you go. Price gives them the move. Price gives them the move. Now, price didn't close above here and give us the confirmation that we're going to change our state of delivery. Right now, price is still bearish on the time frames above the 1 minute until you get this closure above right here. Right there. Then you can start looking at higher draws. But none of that matters until these steps are met. You need a swing point to reference. You need to soup it, candle closure below, confirming an order block, and then all the other steps follow. Trading the lower time frame fractal does not matter unless you have the same reversal sequences prepped on the higher time frames. So whether you're trading the daily range and you want to use the 5 minute or 15 minute or 30 minute, that's entirely up to you. Whether you want to be a swing trader and you want to use the 4 hour and 15 minute for a weekly point of interest, or a monthly point of interest, and use the daily and the 1 hour. You can do this with every single time frame alignment sequence. You can do it with all of them, but the anatomy stays the same. So I hope that was helpful. If you guys want to see more examples, I can show them. If you want to go back test this, forward test this, put it on demo, see how many losers it saves you before the move actually starts, let me know. Till then, be well, safe trading, talk soon. Peace.